welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 172. On today's episode, Cameron joins me once again. We're going to discuss the Palantir earnings report. We're going to talk about what's happened to Figma since they reported earnings. And we're also going to discuss some of the companies coming out with earnings this week. We have Home Depot, Target, and just kind of feel out the general sense of the investing public here in the month of August. So as always, get your mind right and let's get to work. Well, welcome back to the podcast, everybody. Cameron, look at us. Look at us. We look professional. We might not be professional. We have sound effects now. And we're ready to go, man. We can program all kinds of sounds into this thing now. So what do you think of our new setup here?
We've come a long way. We got a lot of lighting. I don't know if it's getting picked up on the camera.
It's too much
but
lighting.
I feel like I'm getting interrogated. I don't know what questions you're going to ask me.
Yeah, that's the one thing we got to get an expert in here on the lighting for sure. We have what would we say? YouTube engineered this as much as possible. ChatGPT. We've used all the things to try to make this happen. But now we finally have like a space, and we don't have to I don't know. For me, it's good because I don't have to keep moving equipment from home to here to now I can just sit down and record. And
this is awesome. Good. And you did all this just so the audience knows. You did you painted it, and then Cheryl was like the interior design. She the plants and the olive art. Tree. Yeah.
So we got a little color in here. I think it turned out well.
It looks great.
I think it turned out well. We'll see what we'll see what everybody else thinks. But again, it is nice to have a spot. And then again, I'm probably not the person who should be in control of
soundboard
sound effects.
Probably not. Hey, you're on a trial basis. Yeah, Eventually, I might have to take it over.
Yeah, that's right. Yeah, but we need like different sound effects for holidays. But I don't know. I need somebody to be able to teach me how to do this. So we look at the markets. Market's still looking pretty good. I mean, even middle of August, we've had kind of a good earnings reports coming out from companies. Obviously, there's been some blemishes that are around there. But we look, and kind of a lot of the big landmines haven't been as bad as were initially feared. Mm-hmm. So I think that is always a kind of a good story. I mean, the big one is going to be Palantir. That was a couple weeks ago. Which, as that thing keeps going up, I mean, I get a little nervous when they're about to report just because there's been so many names in that. But Palantir had incredible earnings. I mean, first quarter with over $1 billion of revenue.
Yeah. What was the first page of the earnings? Do you remember the quote that everyone's talking about?
Oh, what Alex Karp said?
Yeah.
Where it's like world domination or something.
That, and then he said something about like, take that, short sellers.
Oh yeah. He said that about short sellers, which by the way, there was somebody who put out a earnings or kind of a short sell paper on it this week. I think it was Citron. I think.
Yes, it was. I forget the position's really big.
Yeah, but I'm not even, are they even shorting it? I mean, I saw the write-up, but I'm not even sure. Like I looked at
They are.
But the short interest on Palantir is only 2.5%, which is pretty low. I mean, that is considered low. I mean, you'd have to be above 10% of the shares to be considered
that is
kind
extremely low.
So 2.5% isn't, it's not the biggest conviction, but I mean, the stock went from 163 up to 189. I think now it's in the, it's in like 177, somewhere around there. So it's come back a little bit. But I mean, the thing that got me was that Alex Karp said that he wants them to be able to do 10 times the revenue with less employees than they have now.
Yeah.
So that's pretty crazy.
And we've talked about this before, but they are pulling a lot of talent. A lot of talent want to work at Palantir. Like he even called it on the was it the earnings? He did some kind of interview recently where he said, having Palantir in your resume is the new Harvard MBA. Mm-hmm. Like it is such good branding, and it's true. They've produced a lot of founders, that's for sure.
Oh yeah.
Out of all the companies in the last 20 years, Palantir has produced the most successful founders that were like software engineers or whatever it may be. So it's like a good training ground. It is like he calls it the MBA, like the tech MBA.
Yeah, it is when you have a stock that's gone up this much, but I mean, it is kind of nerve wracking when you think about kind of the valuation. Everybody talks about the valuation.
Yeah.
Go ahead.
No, I was gonna say like it is high. It is $177.17. That's over. What is it? What's our year to date? Our year to date is 134%. That's crazy.
Yeah.
But even if like you saw, and you say this all the time, the market needs to digest some of the gains.
Mm-hmm.
And I think Palantir does that from time to time. We've seen it.
Yeah.
Where it'll come back down, and then you're going to see all the negative headlines of like, oh, they lost their, footing, whatever it may be. You should have sold out. And even if we do have that the next couple months, I don't know. I don't have a crystal ball, but if we do have a little bit of a pullback on Palantir and then digest some of these gains, I'm still in it.
Yeah, I think a lot of investors will be. I mean, it does look expensive, and I see the write-ups all the time. But I think back to early in my career, and I've said this a number of times on the podcast. I missed a lot of stocks early.
Yeah.
Because I was like, oh, they need to be like this. And then it took me a while to realize, well, young companies, when they're growing, when they're doing this, they're not going to look like the seasoned companies.
No.
The Amazons of the world and those, I mean, they all go through this kind of period. And so, yeah. And then I think how many of these write-ups are people who wish they would have gotten in the stock? They're trying to talk the stock down so they can build up a position. So anyways, I was happy. I mean, their quarter looked really good.
And it's funny, I was just reading about this too, because when a mutual fund or hedge fund or whatever, an analyst comes up and they pitch the stock, right? They have a stock pitch to their portfolio managers, and they always include a price target of like, okay, here's what we want to try to buy it at, and here's what we want to here's if we get to this price, we're selling.
Right.
Palantir, a lot of people got caught in that. They bought at a great price, but then they had to stick to that sale price, so they sold out at $90, $80. And now it's run up, and they missed all this just because they had to stick to some price target that they once had.
Yeah. I think it'll be hard for it to cross above 200. I think that'll be a ceiling for a little bit. I mean, we'll see.
But if it does,
I think that, the runway for them, I mean, if you listen to like Dan Ives and guys like that who, are managing a lot of money, I mean, they're basically saying that, anytime a company implements their strategy, or their product, I mean, it's just immediate the effect that it has on their profitability of the businesses and stuff. So I have to look. I know that like Databricks is supposed to be coming public. They might be a competitor for them, but I'm not sure. The number of connections that Palantir has, especially politically, is going to be very hard to compete with.
Databricks. So I used to follow this company pretty good. As it's a private company, so obviously they said they're thinking about going IPO, but a lot of tech talent was getting pulled into Databricks when tech was starting to do layoffs as they were trying to scoop it up. I don't know if they end up staying, but I think that could give them a favor. But Databricks, it's a very different appetite. It's a different It's a different company than Palantir. Palantir is win at all costs. Databricks is. I'm not saying it's not that. You know what I mean? Like it's just two very different cultures that attract two very different types of people.
Yeah. Well, we'll see. And speaking of IPOs, we talked about Figma a couple weeks ago.
Yeah.
And it's now, what was it when we talked about it?
Oh, I don't even know.
I think it was probably
dropped pretty good.
Yeah, I mean, now it's $79. So it was the one, just to give you a recap, it's supposed to IPO at what, 33 or something?
Yeah, 32.
And then it's gone, then it went way up to, I thought like 130.
Yeah.
I'm having trouble pulling this up.
It's like 120.
Okay, 120, and then now it's come back down. So that's nice to see, like, that it's actually kind of coming back down to earth. And hopefully, if you listen to this, we talked about just watching it a little bit to see how that happens. So I don't know.
Yeah, we talked. So it's funny. We talked about it before it IPO'd, and then we talked about it when I think it was the last episode, actually.
Yeah, it was.
So there's a lot of stuff. If you're on Twitter or X or whatever it is, a lot of people are giving Figma a lot of flack because everyone's saying they left so much money on the table. They IPO'd at $33, right?
Yeah.
And they went up to 120, right? And so I did some research on this, right? Just because, IPOs have not been a thing over the last couple of years. So it's like, you kind of want a refresher. We talked about it. I listened to the podcast we had. We talked about the roadshow, but just to kind of dig deeper into that. So the investment banks, they go and they do this roadshow, which basically is a sales pitch to all these big hedge funds or mutual funds is what they really try to go after. The long only mutual funds.
Yeah, that's right.
Right. So at the end of that roadshow, it's the sales pitch is more on the business and less on the price. But at the end of that roadshow, they get a list of 200 mutual funds, hedge funds, whoever, right? and they don't know the price specifically that they're going to go public at until the day before.
Right.
So they sit down with the executive team and they show them the 200 names that have interest in it, right? And the executive team, their goal is they don't want somebody day trading the stock. They want consistency, right?
Right. They want somebody who's going to own it.
Here's why they chose. Here's why I think, I don't know. Here's why I think they chose $32 to IPO at is that there's 200 names, right? In those 200 names, you're going to have the long only mutual funds. That's what's going to be your concrete. That's going to be
that's the Vanguard.
Steady Eddie. You know what I mean?
Yeah.
That's who you want owning your stock. And then you'll have like the JP Morgan friend of a friend hedge fund that's going to get allocated so many shares or whatever because they run so many fees. Like we've talked about that. The company, Figma, does not want to allocate any shares to those hedge funds because they know that they're going to sell them day one. So I think how this went about is the mutual funds have a lot of buying power. They can say, hey, we'll buy it 38. We'll top out at 45. And Figma, because they want to go long only, they want to have that stability.
Right.
They're going to say, okay, we'll do 33 because they want that kind of dollar invested in their company and not the hedge funds.
Right.
So I think that's why, I don't think they left them. It's a give and a take. I don't think they left a little bit of money.
Yeah, there's only so much they can control.
But they want that consistency and you have to pay for that consistency.
Yeah.
So, I think that's what they did.
I mean, you'll see it. I mean, also too, another one that we've talked about is CoreWeave. So CoreWeave went public. It ramped up to like 180. Now it's down to 101. And part of that was that, and I know we've mentioned it before, but their employees could start selling. 80% of the employees could start selling yesterday or Friday. Sorry. So this is Sunday, August 17th. But on the 15th, that lockup period released for them for 80% of the shares. And so I think a lot of this coming down there, their quarter was pretty good, but I think the stock just came down because all the investors, the ones that are trying to make a quick buck, were trying to get out basically before employees sell.
Yeah.
Which I don't know. I think that one's probably been, it's again gone up to, started at, in the 30s as well, went up to 180 very quickly, and then now back down to 99. So, if you're gonna invest in IPOs, you just have to have that. You just have to be cognizant that it's going to be pretty rocky in the beginning. And that's what all the academic research shows is the first couple of years. And I think the reason you're seeing this with so many IPOs that we have coming out now goes back to the comment you just had, which was that we haven't seen a lot of IPOs in a couple of years.
No.
And so there is like this pent up demand for IPOs.
Yeah.
And so a lot of companies are like, man, we got to go. This is the time, and so they're going after it.
We're going to learn a lot, I think. I think it would be too, like if you're, invest some of your own money, like just a refresher on IPOs, I think is good. Just like the history of it.
Well, I think that we all, we can kind of, the behavioral side of this is like, man, I want to get in on it. Like I'm going to miss it. I'm going to miss it. I'm going to miss it. And you got to have that patience to let it come back in. And then the investment completely changes. If you own CoreWeave at 40 versus 170 versus 99, those are three different people.
Yeah.
And three different, so just, you can always wait for it to come in. Uber came in, Lyft still, Lyft hasn't done well, but I don't know.
Do you think, so going back to the employee sell-off for CoreWeave, which I don't think that drawdown was employees. I think there was more investors like you're saying. Do you, you got the doctorate in behavioral finance. Employees say they've been at this company for 2 years, 2.5 years, whatever it is. They have a lot of shares that are now vested. Are they holding on to them? Are they selling them? What are they doing?
It just depends on, I'm sure that some of them are probably going to sell. 25% of all the shares outstanding are still insiders, which is high.
That is high.
It's high.
I wonder what that spread is though. Versus the executive team and then the employees.
Yeah, I don't know the specifics on that, but I'm sure that there's some people. I say people. There's some of their employees that probably
early.
Well, it's like, hey, I'm going to sell shares and buy a house, or I'm going to buy, but maybe now that the stock has moved down, when it was at 180, they're thinking, oh yeah, like I'm going to make a lot of money. So now they're going to have this. They're going to feel like they lost that money even though they didn't.
Yeah,
it's weird how that works, but they're going to be anchored. The
anchoring
bias, which is like, oh, you know how these young kids are. They saw what was the price at 180? Like, how much money am I going to make?
Yeah,
and then now it's 100, and they're thinking, oh, I lost however much money, even though they really haven't, because it went from 33 up to, but that's just the way, but they're going to be anchored to that 180 number.
Yeah.
And so some of them, I'm sure there will be some selling just from the sense of there's probably a lot of their worth. They probably took less salary. They took more stock options.
No, they
That's
definitely
probably a pretty big piece of their net worth. So they're probably going to be some people that sell, but maybe they won't sell as many as they thought they were going to sell because they want to see if it'll go back up.
So I was reading about and I don't know if this is true because it was an anonymous story online, but so a lot of these stock options, like somebody has to track the ones and zeros of the stock option packages, right?
Yeah.
E-Trade, which is owned by Morgan Stanley, tends to own a lot of that market, like especially with employee stock purchase plans, RSUs, restricted stock units. Like within the tech industry, I know that they own a good portion of it. And the story was back when we had the IPO frenzy in 2021, I think, right around there. And same scenario as this. So person's been there for 2.5 years, right? The company goes public. They are basically a millionaire overnight. I mean, a lot of hard work
on paper.
Yeah, on paper. And, you invest 4 years into the company. So, payday's earned. And Morgan Stanley comes knocking and says, hey, we'd like to help you manage your wealth. Also, instead of selling your shares, because I'm sure you don't want to do that, we will loan you against your shares so you can go buy that house you and your wife talked about for years.
Right.
Now you got some, on paper, you're doing good. We're going to have these assets as an anchor against this loan, and we're going to loan you money to go get whatever it is you want to do.
They do that for free too, right?
Yeah. Well, this is where it gets real bad. So he does it, right? They do it. And I don't know if this is real. It's anonymous. But then we saw what happened in 2022.
Yeah.
He had the major drawdown. We had the major drawdown. And then what did Morgan Stanley do? They come knocking saying,
hey, sorry, we're going to call that. We need you to sell.
Yeah. And then, so I'm sure the advisor probably gets a nice fee on that for sure. But it is, they'll charge interest on it, but it's like, they'll try to make it favorable. But the thing is, you just anchored a good portion of, now you're transferring your wealth into a home or whatever it may be, that big asset. And that anchor it's not a static anchor.
Yeah.
It's flexible.
Yeah.
So when CoreWeave just drops down to 90 and you did it at 180, that dream starts looking real.
Yeah. Leverage is just not people's friends, man. I mean,
that's the thing. We saw that in 2021. I'm worried we're going to see it again now.
Oh, you will. You will.
Sad.
You will. But that's the way, like, market tops. I'm not saying we're close to a market top or whatever, but it's always like leverage is up, margin is up, IPOs are up. I mean, everybody's feeling great. Yeah. I mean, you said at the end of the day, you still have to be in companies that you want to be in, but leverage is not your friend. Margin cannot be your friend. I mean, when it's great, it's fantastic, and when it's horrible, it is just, when it's bad, it's just horrific.
So don't do that. If you're in this position, don't.
I mean, it's just, you just don't want to leverage all those things. So this week what do we have coming up? We have Target coming up.
Yes.
Oh, wait, we'll come out. We have Home Depot.
We got Home Depot on Tuesday.
Which they've actually, that stock has come back pretty good. So we'll see what they say as far as the state of the consumer. This is normally, obviously, summer months are pretty good for them. Second quarter is usually their best quarter because everybody's, I'm hearing that. I wish I had the sound effect of the Home Depot theme music for all the dads that are working on their lawns and stuff.
We'll work on it. We'll
work on that. But the Home Depot dads and all that stuff. So this is usually a pretty important quarter for them. So we'll see if
100%.
So if that happens, and then obviously we have Target. which has been struggling.
Yeah, you could say that twice.
Yeah.
Yeah, I mean, Struggle City.
Yeah, we got a heartbeat here. They're not doing so great.
That's where you got a what's that surviving song? I'm surviving.
Yeah, they're not doing well.
Yeah. Okay. So this was interesting. I was reading an article. I guess they applied for not their liquor license, but their beer and wine license or something like that. And they're thinking about, and they're taking this. I don't know if anybody knows about Nebraska Furniture Mart, but Warren Buffett owns Nebraska Furniture Mart.
Yeah.
And they're notorious. They're going to sell you a sofa while you've had a few drinks because they sell drinks, so they have a bar there, that kind of deal.
Right.
So I'm thinking about how dangerous that's going to be for Target if they get that. And hey, Mom Margarita, come on, it's Mom o'clock.
They already have Starbucks in there.
Target.
They already have Starbucks in there.
But nobody, I mean, Starbucks is good, but it's a different demographic. I feel like.
Yeah. I
You're
mean,
telling me, mom after a long, hard week. I'm not. I would think I'm a strong guy, but I feel like a margarita on a Friday sounds good when you go, Target
when
shopping
you
or
go
whatever.
stumbling around Target. I think the problem is I mean, I get that moms want to, but it misses
Or
to
a glass
me.
of Chardonnay. We'll keep it classy.
Okay, but the thing is a lot of moms are busy. They don't have time to just like they're like, oh, I need to get in and out. But I understand why Target's doing this because back, years ago, Target was able to figure out that their most profitable customer was new moms.
Yeah.
And it was because new moms are obviously busy. They don't have a lot of time on their hands. They're not going to go to 4 different places. They want to go in, get their stuff, even if they pay a little bit more and they want to get out.
Yeah.
But this was before Amazon was coming to your door every 6 seconds. And I still think that margarita or not, how about I get a, margarita machine in my own house and just have Amazon come in? Because did you see what Amazon's doing this week? Were they rolling out that all the groceries in 1,000 different cities?
Oh, is it like this isn't their drone program they're working on, right?
No, this is something else. You feel while I'll look this. I'm going to look it up.
Okay. Yeah. So we have that going on, and then we got Palo Alto on Monday. Palo Alto Networks. I follow them. Nick Cash is the CEO. He's a pretty strong CEO. So I'm wondering what that's going to look like for the tech sector.
Yeah. So I found this. Sorry. So I found this. So Amazon's expanding fresh grocery same day delivery to 1,000 U.S. cities, offering free service for Prime members with a $25 order.
Yeah. Pretty good.
And then by the end of the year, they want to roll it out to 2,300 different cities. And so that's going to put a lot of pressure on Target. Costco and Walmart are going to be okay.
You know what I hear when I hear that?
What?
I hear there's going to be a lot of Rivian Amazon trucks.
Yeah, that too.
A lot of Rivian, because I don't know if you all have noticed, but you see those new Amazon trucks riding around town.
The electric ones.
Electric ones, those are Rivians. Rivian makes them.
And they're going to be able to do it with like Whole Foods and all that. And I mean, I get, the thing is, I mean, I get that that might be a little bit more expensive, but people are going to pay for convenience. That's the default.
Yeah.
I mean, I think about your generation. I mean, I know you don't have any kids you claim yet.
I don't want to know what that button was.
But I mean, when you think about especially young parents, the convenience factor is just so large.
Yeah. And it's also habits. Don't bet against
true.
people wanting to be lazy or habits.
Yeah, that's true. So, I mean, so I think from that standpoint, for a while, Target was doing well with they had some fashion stuff and they had some, designers they were partnering with, but I just feel like they've lost their way the last couple of years. It's been terrible as an investment. And honestly, why would you invest in Target right now?
No, I think, I agree with you.
Margaritas?
No, not at all. I think it's something to keep an eye on, but this will be I think we're going to look back in a few years. Target will be a great case study on how, when you change your brand so many times, you lose brand loyalty.
Yeah.
And I think that's what happened. They changed their brand way too many times. They try to figure out their new target audience. I know there was stuff around the clothes that was going, some drama there and some craziness. And then they were pushing different products and banning certain other products. And it's how many times are you going to do that to where your loyal fan base is no longer?
Well, you really all of a sudden you don't know who your customer is.
Exactly.
It's who are we trying to design this for? I mean, that kind of thing. I mean, you can't be all things to all people.
Yeah.
And, it's just tough. I mean, it's just, and we've talked, I mean, that business is very tough.
Extremely tough.
That's a very extremely tough business. So we have that. We have, this week news is going to be obviously on Friday. Trump met with Putin.
Yeah.
And that seemed to be kind of a dud. I mean, but tomorrow he's going to meet with Zelensky.
Yeah.
And so that'll probably take hold. And then we also have the Federal Reserve. I believe Jackson Hole, Wyoming is going to be this week. So that's going to happen. So the Federal Reserve meets in Jackson Hole, Wyoming every year. It's not technically a Fed meeting, but it kind of is. I mean, he's going to do a press conference. Yeah, he's going to speak. Deal. He's going to talk about this past week. We had CPI and PPI numbers. CPI numbers were good. PPI numbers weren't great.
No,
that was elevated. The market kind of looked through that a little bit. So we'll see.
I'm wondering what he's going to say about that.
Yeah, I
Or if
mean,
he
it's
will, or
probably.
if he will. He
Let me.
probably will. He's probably gonna
He'll
ask.
probably say we're gonna check the data next time. I mean, the nice thing about the September Fed meeting, which might be beneficial for a rate cut, is the fact that CPI and PPI numbers will come out before they actually meet this
Not a
time.
day after.
So yeah, so it won't be the day after. So they'll actually get those numbers before they actually make their decision. So that could be helpful for the rate environment.
Yeah, I agree. How do you get an invite to one of those? I've always been curious about that.
So one or what?
The Jackson Hole.
Oh, I don't.
Whose list we got to
way
be
above.
on?
I mean, I don't know. I mean, I think it's a lot of the Fed, maybe some of the boards and different things like that. But
Funny they
I
meet
have
in
no
Jackson
idea.
Hole out of all places.
Yeah, I know. I mean, and yeah, I think it's just because it's nice. It's summer. It's not hot.
Get out of DC a little bit.
Yeah, get out of the heat.
Yeah.
That kind of thing. But I still think back a couple years ago we talked about IPO. So I just want to put this out there again. But like, if you would invested in Goldman Sachs or Morgan Stanley,
Oh my gosh.
I mean,
Yeah,
those are the I know, but those are the IPO stock. I mean, like everybody's worried about all these IPOs. I mean, these are the companies making money off of the IPOs, no matter how the IPOs go. So if you look at like Goldman Sachs, especially this year, that has become a very important stock for the market.
28% year to date.
I mean, just a gauge for how the market's doing.
Sneaky.
And I guess the last thing we need to talk about is our old friend. Never met him, but I'm gonna say he's a friend of mine. Warren Buffett.
Yep.
And the big investments they made. So who do they invest in?
United Health. That was a big one.
Yeah.
$1.5 billion. Which contextually, let's put it this way.
Right.
He's got a lot of money. Right? There's a lot of money that he can play with. 1.5. It sounds like a big
Sounds
bet.
like a big number, but it's less than 1%.
It's marginal for him.
Yeah.
But it is still a lot of money. So you just got to kind of look at it that way. But yeah, he wasn't the only one. There was a few people that hopped on that train. Famous Michael Burry.
Yeah, Michael
Big
Burry,
short.
big short guy.
Yeah.
I think
he punted up quite a bit. He's got like a 500 million. I think 35% of his portfolio is in it now, actually.
I found the United Healthcare for Buffett to invest in them. I found it pretty profound because there were a couple of years, if you remember a couple of years ago, he and Jamie Dimon and like kind of a group of people were trying to figure out like American healthcare.
Yeah.
And they kind of gave up. They're like, man, I don't know how to do this, that kind of thing. And so for him to make that investment, especially, I mean, the stock's been, but it looks like a Buffett investment. It's been cut in half, terrible publicity, the struggling.
Yeah.
But the bones are there for them to be able to come back. And plus, I mean, it's a pretty good yield at this point if you buy it around the $300 mark. I mean, it was over $600.
I agree.
So, but it is going to be one of those things where you got to be patient. And also, too, just because of the government landscape and things like that, I don't want United Healthcare to be like a Boeing. That's my fear on that investment, where it's going to take so many years. Okay. Where you're not really going to have much progress, but hopefully it'll be faster than that. But Boeing's been one of those where, that's been a struggle.
How would you compare the two companies and their problems? They have two sets of problems. How would you compare them?
Well, lack of leadership. I mean, I'd say that's kind of bad, but like, the CEO did get killed. And so then it's, and then you have regulations. Trump's been putting a lot of pressure on, insurance companies looking at what they're charging Medicare. Now we're looking to see, did they have some fraud, things like that, which is kind of like Boeing. I mean, they cut some corners, then all of a sudden they didn't have leadership. The thing about Boeing though, is they didn't have competition.
And it was mechanical. It was
obviously that, but I'm just saying like the structures of that. But I mean, it's just a different.
Sounds tough. I mean,
well, yeah.
Where like at least for United, they have you have clients, I have clients that are in the healthcare industry.
Yeah. And
they've always said like they are very good. They're strict about how they run their business. They're really good at it.
Yeah.
And
but it's also like any time you talk to somebody who's in the medical profession, doctors, whoever, I mean, you ask what's the most frustrating thing about it, and it's insurance.
Yeah. Well, yeah.
So he invested in United Health, and then he also invested in D.R. Horton.
Yep.
America's home builder.
D.R. Horton, right down the street.
Right down the street from us. So, which that stock hasn't done very well, but I mean, we need houses, and I'm guessing that's basically an investment thinking that interest rates are going to come down at some point, and then housing is really going to boom.
Coming back, yeah.
Yeah.
Yeah, I see that.
It'll be interesting to see where rates have to go for that really to take off, because it's definitely not one rate cut.
No, but
I think it's somewhere around 5 is going to be my guess.
It's funny now though, but now they're talking like, and when I say they, I mean the news outlets. So take it with a grain of salt. But it used to be okay. We're going to do 25, and people are saying, well, maybe a 50 is not. It might be on the table. 50 basis point cut.
Yeah.
And there's, like we've talked about when they were raising rates, there is the pace and the intensity, right? Those are two very different things. So
Yeah.
we could 25, 25, 25 and slowly bleed this out, or, intensity in the beginning, the market's going to react very different.
Right.
Depending on the two.
It'll be interesting to see what happens to long-term rates when they cut interest rates. The last time they cut, the long-term rate actually went up because our deficit was so much. And so that's what I think the most, retail investors don't understand, is that the Fed sets the rate for short-term rates, but not for long-term rates. The market sets that.
Yeah.
And so, the Fed can control a little bit, but they're not the ones saying this is where a 30-year mortgage needs to be.
No.
So that will be kind of the interesting response from that. But, we'll talk about that when the day comes. But
there is one more company.
Okay, who we got?
I don't know if you knew about this. Michael Burry, another big bet he placed this last week.
Did he short something?
No, he went long.
Intel?
On your favorite company. One of your favorite companies.
Okay.
Smelle Melle.
Oh, geez. Yeah, Mercado Libre?
Yep.
That's good.
He built up a big position in
Yeah.
Mercado. He did a completely 180 because he's big on like one-word Twitter posts.
Yeah.
He went from sell, and he showed his portfolio, and it was all short positions. And then now it's buy, and they're all long.
All long.
Like Mercado Libre, United Health. Those are the two big ones.
Mercado Libre, man, such a good company. They
picked them up, I think, right after earnings. That's my guess.
Yeah, I'm sure they did, because they did have good earnings. Their margin was compressed a little bit because they're paying for more free shipping in Latin America. They lowered the dollar amount needed, but they also showed that's the number one factor for new customers coming on. And so the problem with Mercado Libre, if you're listening to this, is that it's a $2,300 a share stock.
It's not.
Or $2,400. I think it's closer to $2,400. Yeah. So it's not like you can build up a big position, most people.
Yeah.
But it definitely is a company, man. That is one that, man, if they would split, I think it would have a tremendous impact on that stock.
Who says they won't?
I mean,
By the time they announce it, it's already going to be probably factored in a little bit.
Maybe a little bit, but it's still, I think that, over time, that would be a big benefit for them. So we'll see. And we got next weekend, you're going to Northwestern. You're starting school. I'm starting back tomorrow.
Yep.
With a little bit of teaching. So we'll see how that goes. But, we'll see how the fall goes. We'll see, August, September, usually not good times for the market. And this year's been a little, this whole year has been different. So we've discussed that over and over again. But you got anything else?
I think that's it.
All right. Well, as always, don't mistake activity for achievement. And we will see you next time. Thanks, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Right R Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstances. Past performance is no guarantee of future results.